Well, it is that time of the week where I love to call on Robin Cross of StoneX in Chicago and find out what's going on in the lumber. Give me a rundown of what the lumber market is doing this week here, if you would, Robin.
Good morning, Marlon. Thank you for having me today. First, let's go into the prices. March lumber is currently trading at $374.50. That's up a whole 50 cents with only 41 trades over there. May lumber, which will soon be your lead, is trading at $392.50, up 70 cents. And I was all set to give you the new mini truck lumber contract prices, but unfortunately it has not yet traded today, so we won't even talk about it. Well, Bud, due to the abbreviated holiday week, lumber volume and volatility have been a bit on the quiet side. You know, shortened weeks are always like this. And the uncertainty with the upcoming May 15th transition into that new truck mini contract has kept most traders on the sidelines. Simply put, like, traders don't want to be the last guys in the old market for liquidity concerns, and at the same time, traders do not want to be the new guy, the first guys into the new market due to the uncertainty of how the market will perform. Hedgers directly tied to the cash market may see an opportunity to hedge, but speculators, on the other hand, are waiting to see how the new contract kind of shapes up before they jump in the trade. And, although business may be slow for a while, I personally think that is a wise thing to do. So in the meantime, let's recap this week's action. The major sell-off that we were talking about a couple weeks ago and decline in lumber prices continues. February 1st, March lumber saw a high of $533.70 after major producers announced upcoming production curtailments to the tune of 1 billion feet coming off the market for quarter two and beyond. But the rally was short-lived due to the heavy amount of lumber still in the pipeline. So the Feb 1 high of $533, the market has now been down, get this, Marlon, 14 out of the last 15 days, and we lost about $162. In real money, that's about $18,000 a contract on a car of lumber. Coming out of the market, cash still remains quiet. Random Lengths Print reported cash trading around $425 last week. So the futures is definitely a discount. And on the technical side, I would say it is very oversold, being down 14 days in a row. May contract, the one I mentioned that is going to be our new leader, followed suit with Feb 1 high of 520. That also went down 14 out of 15 days to a low yesterday we put in at 391. So that was a loss of about $129 over there. But with the oversold market conditions, upcoming production curtailments, and not to mention being well under the cost of production, I think that guys should be looking at these prices going forward, the very least, buddy, to lock something in. I mean, this is literally the second cheapest prices we had in the last, call it 16 months. So I think guys should really pay attention and also be on the lookout for further production curtailments. I can't see how, after cutting 1 billion feet, that they're not going to continue to look at this market because obviously it didn't really have much of an impact. So there still may be some cuts to go. And I also think that spring's going to be better. I mean, that's our one chance at building is the spring. So if we don't get this thing up and going now, it might be a long year for us, good buddy.
Yeah, well, springtime means the home building really starts to ramp up in a usual year. Of course, things are kind of unusual right now with all the inflation the way it is and everything and economic worries. But Robin, that's great information. The graphics, when you look at the charts, are just stunning compared to where we were here about 3 weeks ago. So thanks for explaining why it's doing what it's doing. Robin Cross of StoneX in Chicago. Don't go anywhere. We'll be back, and I'll take a look at our livestock trade next.